go around the room. John, do you want to start and introduce yourself? We'll get started here. Thanks, guys, for coming to the 5th Multifamily Masters Virtual Meetup. Appreciate you being here. We have Phil Vanderkratz, Donna LaRue, and Jeff Greenberg. And John Throne, I'm not sure if you can hear me, John.
I can now.
Okay, perfect. Do you want to start out and just kind of tell everybody a little bit about what you do and where you're located?
Yep, I'm in York. I'm a commercial mortgage broker. I work with, do a lot of financing from 1 to 4 family, as long as there's no, they can't live in that property. Otherwise, it's residential. They can do that commercially though. And then I'm doing a lot of apartments, different things along that line. I work with a lot of SBA, so I've got fix and flip programs. I've got everything for financing you want to talk about.
Awesome. Thanks for joining us tonight. Phil, you want to go next?
Yeah, sure. I've done a little bit of investing here and there. I've had some rental properties, 1s and 2s at a time. The most recent, second to most recent one that I had was I bought a duplex out in Western PA when I was out there, and converted. There was like a game room on the back of the house. Converted that into a 3rd apartment. I lived there while I was working, and so I converted that to an apartment that I was living in. So I basically lived for free for 3 years while I was working out in that area of the state. I'm an engineer full time, but I've got my real estate license, so I'm also an agent. I do that a little on the part-time side, and then of course, whatever I can do of investing. I've recently had a rental property over in Harrisburg, single-family home that we then sold. We sold that to the tenants earlier at the beginning of this year. So right now I don't have any holdings as far as that's concerned, other than my private house.
Very interesting. We should get together, or virtually, or whatever.
Yeah.
The state seems to be coming to a lockdown period, I have a feeling, but we'll definitely grab virtual coffee or something.
Yeah.
Donna, do you want to tell us why you're interested in being here tonight?
I just am interested in diversifying my investment. I don't have all the background that all of you have. I'm a retired educator. So just, Jason's my nephew. So I feel like, okay, let me hear about this.
Awesome. And Jeff, you want to give your...
Sure. I've been in the multifamily space for about 12 years. Actually bought my first commercial property in 2010, so 10 years on that. It was 2 years prior to that I was studying and didn't buy anything. But anyway, bought my first property in 2010. I've been doing that since then. Recently changed my focus a little bit. I currently am involved with over 1,000 units, but I'm focusing more on raising funds for other deal sponsors rather than doing my own deals, raising the money and doing all of that work. I'm kind of pulling back and narrowing down my focus to raising equity and helping other people get into high quality deals.
Wow, great. That's awesome.
Oh, and student housing. I also have 3 of my properties are student housing.
Okay. Do you want to talk about that a little bit? How's that going right now?
Depends on which one of the properties we're talking about. I've got a property up there in Ohio, and that one is doing fantastic because the school decided that all the sophomores were allowed to leave the dorms, where before they required sophomore and freshmen to stay in the dorms. And all of a sudden, within 2 hours of that release, my property manager got about 50 calls or 50 emails, and we rented a bunch of units up for almost double the price that we normally were. So that one's 100% occupied, all the, everything being paid. My property in Georgia, it's a lower economic demographic. So we went down to about 85% occupied, but we are now pre-leased for January to be at 98% occupancy. A lot of the students, I think, were kind of hesitant and stayed back and skipped a semester. But that one's going to be all leased up. And then I've got one in Tucson that we're got some student housing, and we're doing mixed use on that one. We've got an Airbnb on one of the units, and some market rate and some student housing. That one's kind of a mixed bag. That's in Tucson. Those are the student housing ones.
That's fascinating. I hadn't heard anyone talk about that recently. Just kind of like after COVID sort of hit, was on a bunch of the podcasts about, how is this going to impact it? And it's really interesting to hear the dynamic that, wow, they didn't bring people to the dorm, so now all of a sudden that affected your occupancy in a positive way. So that's fantastic.
Yeah, their enrollment in that particular university is still going through the roof. So,
okay. So it's the right market, right university.
Yeah. It's near Miami University, Miami of Ohio. It's outside of Cincinnati. It's a kind of an upper level university for the kids that couldn't get into the Ivy League. That was the next step down was Miami University.
Huh. Interesting. Okay.
Yeah.
Yeah. So did you research that market to figure out that that's a good market because of the demographic of students? Is that why you went with that?
Well, we've had this property for a little over 5 years.
Okay.
Okay. So, so that's back when we were looking at it, but, looking at student housing, and I could give you a whole spiel on this. I don't want to take all the time, but you're looking at a whole different set of information. You're not looking so much at the city. You're not looking at, the median income. You're not looking at, the age demographics. You're looking at the health of the school. You're looking at how close it is to the school. You're looking at, the stock of units. There's a whole bunch of other things that you're doing, which are totally different than what you normally do when you're looking at a multifamily property.
Yeah, absolutely. I've been sort of veering away because, kind of my background of it. I guess I'll give my history. Not all of you know this. So, yeah, I have been recently investing a lot of time and energy in learning this business of multifamily. I've been for the last 11 years, almost 12 years with business partner flipping single family houses. So we got that business operating pretty well. And so generating capital with that business to invest in multifamily, what seemed like the logical next step. So actually I'm putting a 27 unit under contract this week, I believe. So that would be my first multifamily property. Started investing in real estate in 1999 when I was in Vermont. Bought my first 3 unit, and kind of like you, Phil, we lived in one and rented the other 2 out, kind of the house flipping. And I learned how to build houses when I was in my teens and 20s with a family construction company. So real estate's kind of in my blood. I'm a licensed real estate agent now because it helps me do the house flipping business a lot better and research deals. So that's kind of my background. I love real estate and going to be doing it for the rest of my life, I believe.
Where were you in Vermont?
In Vermont, I lived in Stowe. And then I also lived in Johnson, which is like 2 towns away from Stowe.
Yeah, we used to live in Colchester in Essex.
Oh, very cool. Yeah. Love it up there.
Yeah.
Yep.
It's
I lived
different.
there 10 years.
Yeah.
And my son was 3, and I decided that I was selfish just to live there so I could ski. And then we moved back here to Pennsylvania and back here since. So, yeah. Awesome. Well, nice diverse group here. And I love these because I can, somebody's chatting here. I can record them so the people that didn't show up because I think it's a weird time, can watch it later. So, I'll get into my presentation here if I can find it, and that I put together here last minute today, and just go through, share screen.
Hey, Jason, I have a question. Did you say that you bought something this week, a multifamily?
Well, that's the one we've been talking about. I should have that under contract this week, that 27 unit in Hagerstown.
Oh,
So once I get it under contract, then I will have a lot more information for you. But I didn't want to waste a lot of people's time until they accepted the offer, you know?
yeah, I didn't know about how it all worked. Go ahead.
Yeah. Can you see my screen?
Yep.
Yes.
The one that says
Yes.
why invest in apartment buildings, and sorry if there's any typos. I was just thinking about that. So the reason I have been really looking at this business for the past couple of years and going to, I like going to the Rich Dad or the Real Estate Guys radio, the successful syndication program that they do. And Rod Cleef, I've been on his boot camp once during COVID. He had that virtual one, and I was remodeling my loft apartment and listening to that the whole time. So I've been just a sponge for information, and I think that multifamily apartment buildings is one of the best asset classes to invest in. And so I thought, well, since Anna couldn't be here tonight, why don't I talk about why I think that? So I put together a few slides here, and I just love the dependable income stream that comes from the asset class, because you have renters you're providing a safe, clean, nice place to live, and so they, like any apartment, they'll send you mailbox money every month, and for the investors, that they also get a portion of that. So what I'm focusing on is setting up syndication, so the passive investors also participate in that monthly income. What I've learned is that there's the dividend yields, if you compare to the stock market, just really doesn't compare to the returns that you get from real estate. And it's not volatile. Real estate moves very slowly. The stock market can move very fast, and it can be very volatile. And over time, if you look at an investment of a apartment building, you're going to see that the return on investment for the same amount of money you would invest, say, by buying $50,000 worth of stocks, you'd invest that money into apartments or some other real estate asset type. Typically, you're going to see a better return on your investment. In very few cases that I've witnessed, you wouldn't, but in the lifetime of investment, real estate prices continually go up. Sometimes, the market can crash a little bit because of whatever we're seeing. Back in 2008, everybody was panicking. And Jeff, actually, you got into it right probably the best time to buy. 2010 it was a great time to get in because everybody was panicking. So you see over the 20-year period, I mean, the prices now from then are up. The cap rates have been compressed because there's a lot more money coming into it. People will pay more for the same income, right? So the other really fascinating thing about investing in property is because you can reduce the debt service on the property by the income that it produces. So the net operating income, the NOI, is the gross income less all the expenses before debt. And so you're going to have more net operating income. You're going to have a significant amount of money. So therefore, you're able to to pay down the debt. And when you pay down this debt over time, say a 5-year period, what you're doing is creating equity in the property that you'll realize once it sells at the end. So I think that concept is just fascinating, and there's no other vehicle that I can see that I know of that you can do that. And anytime you want to jump in, Jeff, or anyone here, if you have questions, or Phil, or John, I know you have a lot of experience in helping people with the loan products on these types of investments. Please jump in if you have anything that.
One other thing, and just jump in on. I just got a new partner come with me. She specializes in the past in credit repair, and she's out of Lancaster, and she also can works with credit cards and with getting people back where they can afford to get into the property. She wanted to join me. She's going to start getting with me with the loan. So we're putting some things together. I just got a website set up, and we'll be going with the email printout probably within the next week to quite a few people. So we're starting to try and enlarge and grow.
Okay. Excellent. Yeah, looking forward. Send over the link to your new website. We'll check it out.
Will do.
Have you, Jeff, seen since you've been doing it for 12 years, you've seen this over and over again, where you can force equity, pay down a debt to realize a lot of extra equity in the properties?
Well, actually, one of the big things that really drove me into the commercial real estate is the adding of value. Is as you increase that NOI, you either increase the NOI by increasing the revenues or decreasing expenses.
Mm-hmm.
And that's the big key, because when you increase your NOI, you're adding exponentially to the value of the property. Those of you that are in single family homes, typically you're looking, and you have to look at your comps. You know, what are the comps? All the 1 to 4 units, you're based on what's going on in the neighborhood. You could you can fix your house up to be the best house in the neighborhood, and you're still not going to get much more than anybody else when you sell it based on the comps. So the nice thing about commercial real estate is if I add, say, $10,000 of income, or $10,000, say, on the NOI on a market. I don't know do you know what the cap rate is on your market, Jason?
This Hagerstown property, we're looking at about 7.5 when we're purchasing it. And then
okay, so if you just increased it by 10,000, and I'm talking about on a small property, and you've got you said a 7 cap.
Yeah, about 7 to 8, somewhere in there.
7. Okay, a 7 cap. Just by doing that, you added $142,000 worth of value to the property. Okay,
Yeah,
so how much did it cost you to get that 10,000? Say it's a 10-unit property. 10-unit property. And you raised everybody what $100? That's even $100 a month, or so let's say $50 a month times 10 units. So that's 500 times 12, 500 times the 12. Okay, so we got 6,000. We just increased the property by 6,000, the NOI by 6,000. Divide that by say a 7.5. Okay, so we've increased it by $80,000.
Mm-hmm.
Now that's on a 10-unit property. Do that same thing with a 100-unit property or 150-unit property. You could raise the value of the property by millions of dollars, way above what your cost is going to be to renovate the units, and that's where the value really comes in commercial real estate.
I agree, and that's what really drove me, and that was like the magnet that, that got me to learn everything I could about this, is the value add aspect of it, like you just talked about. So, you know, the property in Hagerstown, the rents are all below market. So there really isn't much CapEx or capital expenditure improvements that needs to happen with the property, but we can, the tenants have been there for a long time. And we're going to be able to, over the first couple of years, increase their rents to market value. They're all aware that this is going to happen, and it's already at a 7.5 cap, which is pretty good for the markets around the country. And if we can get it up to a 9 cap, which is our goal, we'll be doing pretty well, I think. So that the appreciation of the asset value is one of my next points, kind of to talk to Jeff's point. I agree 100%. You buy a property, the units could be improved. Maybe you spend a few $1,000s per unit. Now you can charge a little bit additional in monthly rent, and now the property value itself goes up. It's a fascinating phenomenon in this market. So the value increases when the rent goes up, like we were just talking about. And if you have these value add opportunities, and if they don't even cost you any money, that's even better if you can market for new tenants or as they roll over. Or if the tenants, which in this case, most of the tenants can afford a little bit of an increase in rent, so that's not a big deal.
And
Then,
a lot of times with say your smaller owners, mom and pop, say you were planning on putting $5,000 in a unit to get a $50 a month bump. Okay, somebody might look at that and say, okay, well, that's really not worth putting the money in if it's going to take, well, I mean, what's that going to take me?
a long time.
A long time to get my return on investment, right? And so mom and pop looks at that and they say, well, wait a minute, I don't want to put $5,000 in and wait 100 months to get my money back.
Right.
But what they're not looking at is the demonstration I just gave you earlier with that increased in value of the property, which means that you can either refinance, get that money out, or sell it and get that money out. But a lot of times mom and pop who never plan on selling, you know, until pop's 80 years old, may not be looking at that. And a lot of times the rents are low. They haven't done any renovation in the property for the last 10 years. And all you have to do is fix up the property and get some better, you know, increased rents.
And they own it 100%. They haven't even considered.
Yeah, they may own it for all cash. They've had it for 30 years.
Yeah, yeah. It's a different business model for sure than some of the mom and pops think that you can use. There's a number of ways. So yeah, you can do this cash out refinance after 3 or 5 years with particular projects. And then if it's a syndication type of deal, then you give the investors back, you know, majority of their money at that point, you know, 75% maybe of their money back. And then they're still in the deal, and they still continue to get the cash on cash returns. And then when it sells, then they get the rest of it. So then we combine all of that to determine what the actual return on investment was throughout the entire project, with those three sort of income stream generators, or the three types of returns. And then on top of that, then this is another intriguing thing, is the tax benefits that you get. Even if you invest in syndications, if it's set up properly, the people that invest, if you say you invest $50,000 into $400,000 raise, you're buying a $1.25 million property, and there's depreciation that you can take in the first year. Well, the depreciation now goes down to the 8 people that invested their $50,000 into this raise, and they can take that to offset their tax liability. So a lot of people look at this as a way to save money in taxes, they have capital sitting, not doing anything for them. So now not only do they get the cash on cash return and eventually the appreciation when the property sells, but they're also getting tax benefits because the U.S. tax code, it's written to incentivize real estate investors. The government wants places for people to live, so they've written the tax law to incentivize investors to provide that. Right, Jeff?
Absolutely. Absolutely.
And the depreciation accelerations, they shield that cash flow that I was talking about so that you don't have to pay as much. And then if you decide to talk to somebody about selling your property and you're going to realize a large gain, well, they have what's called a 1031 exchange, which allows you to buy a like-kind asset, and then you defer any taxable gains into the future. And what I love about this particular strategy is that you can literally do this into the future in perpetuity. As you can pass down the properties to the next generation, so you really never have to pay that capital gains tax, theoretically. They make it a little bit difficult because there's a short window of time when you have to get into another property. So some 1031 exchanges, the owners are buying stuff at a higher price than maybe they would have otherwise if they were shopping the market. So that's also, there are some pros and cons with it.
It's also a little complicated with syndications.
It is with syndications, yeah. So where are we at? And the other thing about apartments. So some people think about apartments like 1, 2, 3 unit apartments or single family houses, where maybe you'd have a portfolio of 20 of them. When you're looking at apartment building, there's economies of scale. Instead of having 20 rental houses around town that are really difficult to manage, and I've always said I have no interest in this. I've tried this. I don't really want a large portfolio of single-family rentals, but one location, it's probably multiple buildings, but they're all in the same place. So managing and managing that asset is a lot more efficient and economical than trying to manage a portfolio of single family houses. And the other thing about this is you can raise, if you're raising money, if you're raising capital, then why not think big? If you're going to think anyway, why not think big? I forget who said that, but you know, have the investor base there to be able to buy instead of a 20 unit apartment. Maybe we're looking at the next deal is a 50 unit and then a 100 unit, you know, and really the management difference between a 50 unit and a 200 unit building is not that much. I'm sure you agree, Jeff. And so it adds to a lot of efficiencies in doing that. So that's another reason why I think apartment buildings are a great place to invest. So that's at a high level, some things that I wanted to put out there and talk about. Anybody have anything any questions or anything that they'd like to clarify or go over about all of that?
The one comment I would make is taking care of a 20 unit apartment is going to be a lot easier than taking care of 20 singles. You've got one location, you've got fewer roofs, you have fewer landscaping, you have a lot, less, it's going to be a lot easier. Now, some of the argument that you hear back is that you can get a better quality of tenant in a single family home,
Mm,
and they may stay longer on a single family or a duplex. And that may be, that's going to depend on the market and the environment. But still, if you lose that one tenant, then you're 100, on a single family, you lose that one tenant, then you're 100% vacant.
Yep.
right.
On a 20 unit, you lose one, and it's a fraction. You're still paying your bills. So there's pros and cons, both directions. I always try to get properties that are over 100 units, or 70 to 100 at least. Because at 70 units, you could start paying for a full-time on-site person that's there every day during the working day.
Mhm.
Have an office, and you could have a full-time maintenance person. Under that, it starts getting pretty tight, unless you're managing it yourself. If it's close by, it's hard to afford the people to supervise it. So typically, my 20 unit was my first one I got, and the real estate broker basically was my manager. Now, I went through 3 different people before I got to her, but once she was doing it, it was great. She was leasing the unit, she was collecting rent, she was making sure that the maintenance got done. Her husband was actually doing the maintenance, and he took care of that. And so together they did a great job. But you don't always get those. You don't always get those people that can really perform for you. And so that's why it's good when you start getting in, you can get into a small property, but you probably want to move up quickly as quickly as possible.
Yeah, I agree. And real estate is hyper local, so really, what makes sense for that market. In Hagerstown, this deal that we're looking at, for example, there aren't a lot of this type of housing in this town. So therefore, it's in high demand, which makes it, attractive to me as an investor to come in. A lot of the housing that you'll find in this price range, it's C class, so it's going to be in the city. There's problems in the city. People want to live outside the city, and so this gives them the opportunity to do that. So it's different in every market. I agree. Like your market may be prone to single family houses. Maybe that makes more sense in a particular market. But like you were saying, management.
Is that property near you, Jason?
It's not far. It's about an hour away. Yeah.
That's not too bad. The nice thing, now you said it was what, 20 units or something?
27 units. Yeah.
27, yeah. And the nice thing is if you can find a couple of them, if you can get, if you get 2 or 3 of that size, and then you can get a manager that can be handling all of them.
Right.
That makes it a lot more economically sound. That way, you can have somebody that just travels back and forth to the different properties if they're close by. I was trying to do that in Cincinnati. We were looking at some 40-unit properties, and we wanted to find another 40-unit property, that could support a manager that could spend part-time on one and part-time on the other.
Makes a lot of sense. Yeah, having a dedicated property management team or manager to organize. I don't want to be the guy running to the property if there needs to be a roof replaced or something. You know what I mean? I don't want to be doing that. But luckily, there are about 15 property management companies in town, so I'm going to start interviewing them. And
yeah,
seems like
that's important.
Yeah.
Interview them. Have A, B, and C ready to go.
Yeah.
So if A doesn't work out, B's ready to go.
Indeed,
yeah.
Probably right.
It's because, well, the thing is on the smaller properties, you have the smaller management companies, they may not have the resources, but check out the property management. Go see some of the properties that they're managing when you're going through your interviewing process.
Yes.
You see what kind of properties they're managing, how they're being taken care of, what this management company is doing. It's good. You want to learn as much about them as possible because they're key to the success of your deal.
Yeah, correct. And then also what I was thinking of doing, and I've heard a lot of people do, is go actually tour the property as if you were interested in renting it, seeing a couple units that way. So that'll be part of the due diligence period and if we get it under contract. And it has mobile home pads, mobile homes. They're all occupied. And then it's a converted motel with a bunch of efficiencies. There's 12 efficiency apartments, and then it has 3 single-family houses and a double wide. So it's a weird property, but it's all consolidated. So it's been well taken care of. There's a lot of pride of ownership that you can tell in the property. So the family that's had it for 50 years keeps on top of it. And, it looks like a good deal.
Yeah, secret shop it and secret shop the different management companies. Keep track of what they look like with the different management companies. Yeah, we always used to do that, going wherever it was. Our daughter or son or somebody's going to got a job coming out in this area, and maybe he's going to be renting, so
that's the story.
We would come up with all kinds of stories and then walk through the properties. But also when you do that, you want to compare the finish of, the property. Now, is this, okay, they're getting this rent. Well, does our property compare?
Right.
What's the appeal of this property? What does it look like inside? What does it look like outside? Because if I say, oh, I can raise the rents $100, but my property is terrible and this one's all fixed up, you could get an idea of where you can get to, but you have to put the money in to fix it up and you get it to that level.
Exactly. Yeah, that applies to the house flipping business too. So we do a lot of that comparative.
You want to see what your comparables are.
Yeah. Yeah, exactly. And that's one of the things that attracted me most about this property and why I continue to pursue it, is because most of the units have been already remodeled. So they have LVP down, nice countertops, appliances are all nice, replacement windows, all of the the heating systems have been upgraded. So yeah, a lot of that work's already been done. So just getting the rents where they should be is the biggest challenge.
Yeah.
Yeah.
How what's the occupancy on it?
It's 100% occupied.
Okay, so that the rents are too low.
Yeah.
If a property's 100% occupied, then the rents are too low.
Yeah. Yeah, they did have one vacancy when I was looking at it, or when I first started to look at it. One of the mobile homes was being renovated, so that's done, and now they have it rented. And that was the only vacancy they had. So yeah, it's weird. The banks, I had one bank already say they're not interested because it didn't fit their box. But I'm going to talk to John tomorrow and see what he has, and I have a feeling we'll be able to get the financing on it. I think I'll be able to raise the capital. So
yeah, it sounds like it's a mix. When you get into the mixtures of different property types or asset types, the lenders get a little spooked. So
yeah, so probably a local lender is what I'm thinking, and I got a whole list of lenders from the broker that's selling the property. So
what's the purchase price?
1.2 1.25.
That's not bad.
And
now, did you meet Anton when you were on the virtual thing with Rod, the virtual boot camp?
did I? It sounds familiar. I'm not sure.
Anton Matley.
I know the name. I don't think I met him.
Yeah, but Anton is a mortgage broker. I mean, he normally is working with a lot of the bigger stuff, but he may have suggestions for you as well.
I'll write the name down. Okay.
Yeah,
Yeah, I appreciate it.
Yeah, Anton Matley. He's. Are you in the Warriors?
I am not, but Jens is.
Well, Jens could get you the information.
Yeah.
Jens, yeah, because Anton's in our mastermind, so is Jens.
Awesome.
Yeah.
Yeah, he's been great to work with.
Yeah, Jens is. He's been doing well for himself.
Come a long way in a few years.
He has. Yeah, he didn't have any properties when I met him 3 years ago at a Joe Fairless event in Denver.
Okay. Yeah.
I think
I
that's when
think he said 4 years, so maybe 3 or 4. Well, yeah, but.
Well, he was doing single family. I don't think he got into multifamily.
Right, that's what it was. Yeah, he had a.
Yeah, he was doing. Yeah, he was still in. He was in real estate, but hadn't gotten into multifamily yet.
I got you.
But, yeah.
Well, excellent. This has been a good conversation. I appreciate everybody coming on, especially you, Jeff, for giving some of your stories and background. That was super helpful.
Hey.
I really appreciate it.
If anybody has any questions, I'll be glad to answer anything I can help
Well,
with.
just one thing, I hear rumors as we talk about the possible administration change that the Biden administration wants to try to get rid of the 1031. I don't know whether that's just a bunch of hot air or is there any truth to it?
I've heard that same rumor. My comment to that was, first of all, I don't think that's going to happen, but if it did happen, that's usually 1031 to me is icing on the cake. That's a great bonus for this business, but it wouldn't kill it. I think a lot of people don't do 1031s because they're more pain in the neck than anything, and they're complicated to. I mean, if you've got, it's all about timing to get them done. Those in the syndication world, such as myself, we can't use it anyway. Because if you're selling a property and you want to buy into a syndication isn't a property. So you don't have the like kind. Now, you can do something which is like tenants in common. So I could take a deal and say, okay, I'm going to partner with somebody. Somebody's got $1 million or $2 million of 1031 money, and they want to come into my deal. Well, my syndication and his 1031 money could come together to buy the deal. So that way his name is still on the deed. That's what he needs for the 1031. But you don't see a lot of people doing that. So for the single family world, it might have more of an effect. But when you're talking about syndicated deals, you don't hear too much about people doing the 1031s.
Okay.
Yeah, it's very difficult. It's a legal paper nightmare, I guess, from what I understand.
Yeah, there's other tax things that may happen. Biden's talking about increasing the taxes for anybody that has an income over 400,000. And if that's your situation, then obviously taxes are going to go up but for most people that's not going to affect them.
I would like to be concerned with that problem.
Exactly. If you're in that bracket, then okay, you can be concerned with that problem. But we don't know. Who knows what's going to happen, in the Biden administration. The one thing that we do have is on the depreciation. Where that was, I believe that was, I think that was something that Trump did in his early part of it, where you got the bonus depreciation. So a depreciation that you were able to take over 5 to 7 years, we were able to take in year one. Okay, so year one of ownership, you could take a huge write-off and take a paper loss of a lot more money, than what you really brought in income or we're going to have to pay taxes on. So that's a big thing. Hopefully that's going to continue. everybody's got to go talk to their tax attorney, their tax accountant, and find out how things are going to affect them.
Yeah, exactly. And make sure you're talking to one that understands real estate. There are so
Absolutely.
many out there that don't get it, and
Yep.
they don't know what they don't know. And
Okay, if I tell a story on that one.
oh yeah, please.
I was buying this property in Houston. Okay, and I had one of my investors said, "Hey, can I show this property to my accountant?" And I said, "Sure, sure." Now, this property I was buying it from a guy that bought it out of foreclosure, and he had paid $700,000 for it. This was 62 units. He'd paid $700,000. 2 years later, I was buying it for $1.3 million, and my projection in my pro forma in 5 years that I would sell it for 2.1. So in that 7-year period from when the previous owner bought it, the property would have tripled in price. Okay. And so the accountant told this potential investor, there's no way in hell you could triple the value of a property in 7 years. And she didn't invest. Well,
Oh my God.
the situation is he was right. I didn't triple the value of it in 7 years. I sold that property for $2.7 million in 3 years. So in 5 years, it went from his 700,000 to my 2.7. So I guess he must have been right. Anyway, yeah. So make sure that when you talk to an accountant, they understand how to value properties, how to they're up on the latest taxes on real estate, because they don't all aren't all
Absolutely
familiar
not.
with real estate.
Yeah, I've been
Especially
through my
commercial
share.
real estate.
Yeah, commercial real estate's a whole different ballgame, and
Yeah.
I'm baffled by the number of CPAs I talk to that just have no idea of the things that I know. I'm like, just simple things that you should probably know if you're a CPA.
Find one that's involved themselves in
Yeah.
real estate, because then they have more of an incentive as well to make sure that they know every little in and out on how to save money in real estate. So it's good to know.
Yeah, absolutely.
Because it's not as Robert Kiyosaki says, it's not what you make, it's what you keep.
Yeah.
So you want to keep as much legally as you can.
Mm-hmm. Yep, that's right, and that's why most real estate investors don't pay income taxes.
Yeah, or pay very little.
Very little, yeah, in income taxes. Everybody pays income taxes, but like I said at the beginning, the tax law is written to incentivize people to invest in providing housing. So why not do that?
Yeah.
That's why we're doing what we're doing. Awesome. Well, this was great. Anybody else have anything else they want to share or talk about?
No, it's great. Very informative. Thanks.
Absolutely. All right, cool.
And
Bill, maybe we could get together, like I said, and see what's going on in your world.
If anybody has any questions, I put my email address up in the chat.
Oh, good.
If anybody comes up with any questions in between, I'm always happy to answer questions, help people out.
I really appreciate that. Yeah, that's awesome.
Hey, this is something I love about this business. There's an abundance mentality. I mean, you've gotten involved with the multifamily masters, and there's a whole bunch of great guys and gals in this program, that nobody is afraid that somebody is going to steal something from them because they shared.
Yeah.
So you'll find that everybody is willing to share and to give whatever knowledge they have, and typically it's done for free. And that's not skin off my nose. You're not going to steal my deal, because there's plenty of deals out there, and we're plenty of things to do. So you build relationships, you help each other out, you do what you can. That's what I've been doing for the last 10, 12 years. I've been running this one club locally out here since 2005 that I've been going to that. And it's mostly single family real estate, which I don't even get involved with, but I go to it anyway, because sometimes we talk about commercial real estate, but I enjoy meeting with people. Now we're doing it virtual, so it makes it even easier for me.
Yeah,
And
you
I
can do a lot
would
more.
encourage everybody to go to other events. This is what's great about it. I'm in California and I'm talking to you guys out in Pennsylvania.
Yeah,
You
right.
know, this is great. I used to go to probably 7 meetups a month because I had to drive to them. Now I probably go to 2 or 3 or 4 a week
Mm.
because I can be anywhere. I was interviewed in Hong Kong. If you want to get up early, Eddie Wong is doing one, I think, Wednesday in Hong Kong, but he does it for me. It's at 5 o'clock in the morning for me. For you guys, it would only be 8 o'clock.
Yeah, that's tolerable.
Yeah, tolerable. The 5 o'clock when he interviewed me was, but he's, you could look that up. That's on the 18th in Hong Kong. Eddie does the multifamily masters. Eddie's a good guy, and half the time he's on different ones out here
Oh,
in
that's
the
cool.
States.
Yeah, I'll check. What's his name? Eddie what?
Eddie Wong.
All right.
And,
Cool. Yeah.
and it's a multifamily masters event, and it should be 8 o'clock your time on the 18th.
Okay. That would be interesting.
Yeah, Eddie's a good guy. He's a good guy, and I see him. He joins a lot of the meetups out this direction. But there's tons of them. There's one in Chicago I go into. Brian, I can't pronounce his last name, Krockendorf or something. But he's out of Chicago. He's got meetups, but there's meetups all around. And you could meet people and hear other opinions and what everybody else is doing.
Yeah, it's fascinating. That's why, like you said, I love this business is because it's a collaboration. We're working together more than we're trying to compete with one another because you can't really compete. We're not selling anything, it's kind of the cool thing about it.
You never know when you're going to want to partner up either.
Well, that's the thing. Yeah, you find people that you're synergistic with and you want to partner on a deal. I think that happens more times than people competing for.
I had a dentist that comes to my meetings, and he was telling me that he was going to put like $2 million into this property and buy it himself. And then he was kind of telling me, he says, well, I'm going to be stretching all of my resources. And I looked at him and said, you would be a fool to do that, to put all your money into one deal just because you want to control it yourself. I said, look, even if you go and find one other person, go find one other doctor that, and split it with you. I mean, if you want to put $1.5 million in instead of 3 million, go for it. But don't be stretching your resources and doing it all yourself and taking on all the risk, or get 2 or 3 people, I mean, these guys have money, but heck, even with that, why would you want to put all of that money at risk? Split it up with somebody else, 2 or 3 other people, where you're all taking on a little bit of the risk.
Diversifying your funds a little bit, a lot.
Yeah, and then you could go get the next deal together or something, but you don't want to put all of your money into one deal. You need to spread it out. And those that have money, when I started, I didn't have any money. Every deal I did, I used my money to get into the deal, but as soon as the deal closed, my money pulled back out. But I still got everybody else's investments. I made deals for everybody else. That one I told you about, Houston, my investors were very happy with me, making that kind of money in 3 years.
Mm-hmm.
So that's the whole thing is you can help other people make money, at the same time you're making yourself money. So that's I just love that about this business.
Yeah, providing opportunities to people to invest in real estate that would never have that opportunity.
Absolutely, and that's an excellent point because there's a lot of people out there, especially a lot of high net worth people, doctors, dentists, lawyers that are busy running their business, busy making good money and don't know anything about this business and don't have the time to do it, maybe even don't have the interest to do it.
Mhm.
But as a service, if we can help them out and help them do this business, you know, we're providing a service to them as well.
That's what I feel like. Yeah.
It's a team
In both
sport.
of my real estate businesses, I feel like I'm providing a service to the community.
Absolutely. And a fix and flipper, you're fixing up the neighborhoods.
That's
You
right.
know, we're out here in California. A lot of times, you know, they sometimes people look at fix and flippers, you know, as, you know, they're trying to get the properties for real cheap, you know, but there's rundown neighborhoods. It's the fix and flippers that are fixing up those neighborhoods. You know, otherwise a homeowner isn't going to come into this trash heap property that maybe has been run down and abandoned, but it's that fix and flipper that comes in, fixes it up, and now you've got the nicest house in the neighborhood. You know,
Yep.
real estate investors provide a good service. Were you saying something, Donnell? I think you're muted.
No, I'm just going to say thanks so much. I got to go, and I
Okay.
appreciate all the information.
Thank you. I
The,
hope I see you again.
Night.
Good night.
But yeah, that's what I was just going to say. I provide a service to people, families. Primarily, I work with probate, and so if they have no other option, then they're selling me the house. It
Absolutely.
makes it very easy for them. I provide that service, and I have dozens of testimonials that people have written me for
Oh,
that.
absolutely.
I love that business. Like I love helping those people. And then, like you said, the house at the end of the day was run down because it hadn't been updated in 50 years, and now it helps the community look better. So yeah.
Mm-hmm. Yeah, no, you're helping. I knew somebody that was trying to buy all the houses on the particular block, and he was bringing up the block, and then also talking to other investors to buy houses on that block, and they were bringing up that whole neighborhood. You know,
That's excellent. Yeah.
that's a beautiful thing. That's and a quick story with the property, the student housing I bought in Georgia. It was 30% occupied. It was 144 bed student housing, and it was 30% economic occupancy. So only 30% were paying.
Wow.
Okay. And we put about $500,000 into that, fixed up every single unit, fixed up the hallways, fixed up everything, put security cameras out, the whole bit. And then I interviewed the students afterwards for a promotional we were doing. And my question always was at the end was, you know, what would you tell the owner if you were able to talk to them? You know, I never tell anybody I'm the owner, but the statement that this young girl, you know, she made me cry. She said that she would tell the owner that now she has a place that she can show her mom, that she could show her mom where she's living, because now it's clean and safe. Before she couldn't show her mom.
Oh my God.
And you know, this was a low economic area. These are, you know, very you know, poor individuals. Most of them are on financial assistance. But she had a place that she could be proud of.
Mm-hmm.
And then we had like room decorating contests, you know, people would submit what they did to their room. So they took pride in pride in their units and stuff. And so that, you know, that was just really probably the most satisfying thing I've done, you know, while I was in real estate, is being able to help, you know, these 18, 19, 20-year-olds, you know, live in a safe place, you know, while they're going to school. Being able to show it off to their parents.
Yeah. Look where I'm living, Mom, Dad.
Yeah, something they can be proud of. Because I'll tell you, when we walked through it during due diligence, it wasn't a place I'd want to show anybody.
Oof.
No, it didn't look so good when we walked through it.
And so is it kitchens, bathrooms, or what did it primarily do?
The main thing was just the interior, the hallways. Well, first of all, going up the staircase. As soon as you walk in the staircase, you probably would have turned around and walked out. If you've ever been to a public parking lot where someone's been living there and pissing on the walls, is kind of the image that I always have. You know, it's just kind of disgusting. And then you look down the hallway, which was an industrial gray carpeting with stains on it. And the hallways, each of the hallways were 120 feet long, and we have 6 of them. And it just looked just scummy. I mean, you felt like just turning around. And if I was going there with a college kid or something, I would have turned around.
Right.
There was just no way in hell.
So
The units themselves weren't all that. The units themselves weren't all that bad. I mean, we redid all the flooring in all of them, all the flooring, painted all the walls. Well, they were supposed to be furnished, and there was no furniture, so they were supposed to be furnished for the students. But we did that. But the hallways were the one thing that made the huge difference, and the staircase. You know, putting an epoxy paint over the concrete stained staircase and painting the stairwell, just so it was much more inviting. You know, and you look down the stairways or the hallways, and we put LVT on that thing. Cost me a damn fortune, but it just totally changed it. Totally, you can imagine. It was 100. It was there. The hallway's 120 feet, and we had 6 of them. So you can imagine what that cost on LVT.
Yeah.
It's a lot of service, but it changed the whole atmosphere.
Right.
And it changed.
That flooring really changes the look of anything that you put in it. So.
Yeah, and painted the walls, made it two-tone, and you know, put Wi-Fi in and stuff. But that changed everything. But so I felt good doing that. But we paid 1.3 for it, put about 5 in it, so it's 1.8, and we figure we could probably get about 3.7 out of it now.
Very cool.
Because as I said, we're at 85% occupied, but we'll be at 95 in January. So,
what's the cap on that?
we're figuring a 7 cap because it's in a very small market of Georgia.
Okay.
There's really no. Getting a cap rate is real difficult because there's nothing around it that's comparable.
Mm.
You know, I mean, cap rate, you still need similar type of thing, and there's nothing near the school.
Somewhere to start, yeah.
Yeah, so you got to go pretty far away to kind of get cap rate. So we figure a 7 cap, and
Okay.
you know it's 36 units. It's not real big, but it's right across the street from the university. I mean, the property itself was built in 1999, so it's not even that old. We didn't do anything to the outside. We didn't touch the outside except for some landscaping. But the building outside had great vinyl siding. We've redone the office and laundry room, but other than that, most of it was the hallway and the interior of the units.
Mm.
But,
Oh, that's fascinating. I love your stories.
yeah.
Thanks for
All righty.
doing that.
Well, you know, hey, maybe I'll join you next time. So
Yeah.
you're doing this every Monday? I mean, excuse
every-
me, once a month, Monday?
Yeah, third Monday of the month. is
Third
what-
Monday. Okay. But I encourage you both to, participate in some of the other ones now that we're all virtual.
Yeah, I never even thought about it. I've been doing the ones with the group that puts on multifamily matches. They have large. I jump on those occasionally, but
Yeah, I don't think I've seen you, but anyway, yeah, I usually get into those. But yeah, I jump on as many different ones as I can.
very cool. All right, guys. Well, thanks for joining, Phil. Thanks for joining, Jeff. And,
Yeah.
we'll do this again sometime, hopefully.
Yep, you guys have a great evening.
All right,
You too,
take care.
thanks.
You too.
Bye.
See ya.